That rand trading around 691, 692 this morning, so a bit of strength coming through. Of course, we remember 2 days back we were trading up at 7 rand and 7 cents, but this looks like it is a dollar weakness story that's helped to boost the rand. What's your view?
Morning, Stephen. Yeah, that would certainly be our view. The dollar was yesterday by 2 sets of disappointing data. Firstly, weekly jobless claims came in higher than expected. And secondly, the second estimate of US GDP for Q1 was released yesterday, and market consensus forecasted anticipated an upward revision of the initial estimate. The initial estimate was 1.8%, and the market was looking for an upward revision to 2.2% on the back of what they expected to be an upward revision to consumer spending, and that actually didn't materialize. So there was no change to that. And at this point, looks like the US economy expanded by 1.8% in the first quarter. So that was slightly disappointing, and then the dollar certainly suffered on the back of that. But looking forward, we still stick to the view that the debt concerns in Europe are not going away, and over the near to medium term, that should see extended euro weakness come back into the fore, and that would certainly help to pull the rand lower. In addition, the rand could also be battered by the fact that should these euro debt concerns not dissipate in the short term, the dollar could once again benefit from its safe haven status that we saw happen a little bit earlier this week. So in the short to near term, we're still looking for further rand weakness. We still see the rand heading to 717.
Any movement from the rand from the inflation numbers out yesterday? We had PPI coming in softer than expected for April, 6.6%, and the consensus was for a rise of around 7%. Do you think that had any impact on the rand?
Well, he said don't discount that it may have had an impact on the rand. As you mentioned, the rand actually strengthened yesterday. We think it was still primarily a dollar story, but the fact that PPI surprised to the downside quite significantly, and this follows on a softer than expected CPI as well, in our view, that should temper expectations that the Reserve Bank is going to embark on an early rate tightening cycle. We still think that the first rate hike is going to be seen next year, and that certainly could have been positive for the rand, both from a growth differential point of view and also in terms of encouraging inflows from foreigners into JSE.
And yet we had Reserve Bank Deputy Governor saying saying this morning that the Reserve Bank wouldn't hesitate to take timely action if it saw some of those second round inflationary effects coming through. And this is despite inflation really surprising to the downside. Do you think we're going to start to see inflation accelerate sharply, because the Reserve Bank predicting it will top 6% in the first quarter of next year?
Our view, Stephen, is that inflation is going to continue to trend upwards, but not accelerate sharply. We don't see it reaching the upper limit of the target range this year. And what we saw in the first quarter, particularly related to the PPI, is that firstly, commodity prices were rising quite strongly, but also there was such a low base established in the first quarter of 2010 that inflation was bound to accelerate quite strongly. And then we saw the PPI come off quite sharply then for the first month of Q2 when these base effects started to dissipate. Having said that, there are still, of course, price pressures, particularly, again, with reference to the PPI. If you look at electricity prices rose quite strongly. And if you're looking at the CPI, then factors like administered prices are also continuing to push up inflation. So I think it's prudent that the Reserve Bank continues to make statements that they are being vigilant, that they wouldn't hesitate to act on second round effects. But of course, these second round effects would then need to become a bit more evident in the data. And at the moment, inflation is not looking like it's posing a major problem.
Well, in the meantime, we've had Japan registering some inflation. That's for the first time in 2 years. April core CPI up 0.6%, so a bit of a turn for the books in Japan. And of course, we were looking at deflation in a number of economies just a few months ago.
Well, yes, Stephen, those deflation worries do seem to be dissipating, and of course the fact that consumer prices rose in Japan is certainly positive for that economy. But one must bear in mind that there are two sets of data that were released. Firstly, there's the national CPI that's for April, and that's the number that you referred to that was up. They also released the Tokyo CPI, which is then for May, and that generally serves as a bit of leading indicator for the national number. And Tokyo prices actually dropped in May. So it doesn't suggest that the Japanese economy is entirely out of the woods. Consumer prices could resume a downward trend from this point. One would have to wait to have significantly more data to make a definitive conclusion on that.
And Nomvuyo, we have public holiday in the United States on Monday. Would you expect trade to remain quite quiet ahead of that holiday and into Tuesday?
Yes, certainly, Stephen. There's a holiday in the US, as you mentioned, and that could have a serious impact on the rand in terms of lowering overall volumes. Then in addition to that, there's no first-tier data out on that day. So looking like markets could be fairly quiet. But then the next day, looking forward to Tuesday, there is a wealth of domestic data out. It starts with private sector credit extension. Then we have GDP, also have a trade update, as well as fiscal data from the government. So certainly Tuesday is going to be quite a key day for the rand next week.